Well, hello, Maverick traders. It's Joe with you again. Market Roundup. Seems like I was here yesterday. That's because I was. But here we are on the 2nd. It's a Wednesday. Let's see what it brought to us. I've got my 2 cents. I'm going to share stuff with you. You guys know the drill. Take responsibility for the outcome. Let's take a look at what happened today on Newswise. Let's look at it technically, and let's share trades with the community as we always do.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you're going to see that, wow, it was about as flat gets. Let's jump straight into the daily news. The U.S. market's flat again today. We did have a number that came out today. We have the ADP employment number. Came in higher than expected, but it was well below the expansive 200K level. Still higher, but the wages are down year over year from August, 0.7. Not a catastrophic fall, but what it's showing is a little bit of contraction when it comes to, yeah, we did add more jobs than expected. However, we're below an economic expansion level of the 200K, and the wages did kind of subside. I'm not going to say the wages fell or anything, but they've subsided. It's not a bad thing. It's not a great thing. It's just kind of a whatever thing. So how do the markets react to this? Well, if this is the cause, let's take a look. 0.09, 0.01. Look at that. SPX barely almost 0.00. The Q's even 0.08. Russell's down 0.15. I mean, no movement at all. I mean, a very, very inside, flat, nothing day. Oil a little bit higher, and then gold down a little bit. But take a look at the advanced decline line here. 50-50, basically, right? 50% declining, 45% advancing, and 5 just breaking even. Above below the 50-day moving average, we're still about that 70-30, right? Well, a little less, 67-33, but not much to go off. And I truly believe these markets are just kind of poised and kind of waiting for something. Let's jump into the chart here, but it was interesting how we had some escalated tension overseas. Boy, I mean, a war breaking out, and these markets seem to just kind of shrug it off. Now, regardless if you guys watch the news or not, if you were just to chart this, you'll see that it looks like an absolute uniform pullback, which we've been talking about for quite some time. I like to draw 2 lines here, and the reason being is because I'm going all the way back to a later date here in basically summertime, and then I'm using also this recent area. Understand, folks, that when we have retracements, they could be in an area, even if it got to this 20-day raising moving average, I would still think that's a pretty good support level, so it's an area, but it's a uniform pullback. Volume is nice and steady. So these markets seem to be pretty complacent. They seem to be nice and happy and just kind of staying at where they're at and kind of consolidating, meandering. Let's take a look at the Qs here. You can see the Qs had a little bit more of a pullback. We discussed this as well. We will continue to, but there's a range here that it can consolidate at the highs and lows. The area that I'm most focused on is probably going to be the 20-day moving average or this most recent support level that it's set here the end of or mid-September. I know it's not a major one. I mean, the big one's going to be back what it did here at the beginning. Obviously, we have this ascending triangle pattern, but it's got the potential to really create a wide range, and it should because it's the Qs, right? All the technology stuff, communications. So it's going to be a little bit wider, but in no way, shape, or form is this bearish. It seems a little reluctant or a little weak. But when I take a look at pivot points to the high, from this high set here in mid-August to the high that it's set here at the end of September, it's still higher. So we do have a very anemic ascending triangle pattern, but it's still ascending nonetheless. So I can't write this off, or I can't say anything about, hey, everything's going bearish or things are going to turn around. The best I can say is, hey, it's consolidating and waiting for something. Let's take a look at the heat map. Not a lot moving. And when you have the S&P up 0.01%, this is kind of exactly what I would expect it to do. So I'm really not going to look too much into the fact that, hey, it's just a little bit of a hesitation based on what these markets have done over the last few days. My outlook has not changed. It can't. I'm going to stay at the +1 for the week because we got a high base going on. +2 over the month because it is above a previous swing high with an ascending triangle pattern. I would like to see it break a little higher. In fact, folks, I could probably move this slope to a light green. You can see the 50s kind of moving higher, but I'm not super excited about it, which is why I've kept it as a +1 for the week. I think we're going to consolidate and kind of move higher and stay with that glass half full mentality. So what I thought would be fun today, since I did this yesterday, I had Walmart up as a potential bull. It's still on my list, folks. It just didn't trigger today, but it is still, I'm waiting for it to trigger as it breaks above a high. But I had RTX that came from the trading room. AXP, FTNT, both sideways to bullish trades. Actually, they're both bullish trades from the trading room. And then Adobe, one that Corey, I think, brought up a couple of days ago. But what I like to do is kind of see where they're at and use what they've done to kind of explain the outlook a little bit further. So RTX is pretty obvious. This was supposed to be a high base breakout, and it took a little while before it actually did that. Yesterday, it looked like it had a surge, and with all high base breakouts, the majority of the time, and this is why I love diagonal spreads or targeted butterflies for things like this, is the majority of the time, they'll break out, and what's the first thing they do, folks? They retrace. Whether that was a gap up that came back down or a candle that goes up and it sets a little bit of a doji, this is completely normal. Now, there wasn't a lot of volume and conviction in this move, but nonetheless, folks, this is a beautiful high base breakout. The trades that were suggested were something a little bit more sideways to up, and is it directly in line with the expiration cycle for the 4th, which is this Friday. Something a little bit more aggressive, yeah, you could target up the 126, 128 level, a little higher with a little bit longer term. Let's take a look at the sideways. Now, why I have it on the sideways is because if you did slow play this, it is definitely in its consolidation area. It's still staying here. Now, unless the markets decide to get strong or the sector, in this case, financial sector, decides to move higher, then American Express is going to have a harder time leaking up. Now, the trade I think suggested in the trading room was a 272.5 vertical spread target area. Well, you can get more aggressive with it if you went further out in time. Why I like to discuss this, folks, is because this is taking its time and it's doing exactly what the markets are doing. It's in a great spot. It's looking really good for that 272.5 expiration for October 4th. However, if you guys are, hey, I'm going to target this thing up a little higher, you're fine because you have the patience to wait for us to get through this week and maybe into next week, we get another surge to the upside. Consolidation is what it is. And when you see a market that's going flat, we got to find flat trades. Now, this was a +1 trade. But could we use it as a 0 trade? Absolutely. Now let's move over to the bear side. I love this trade that Corey was talking about with Adobe. This is something that's been weak and it stayed weak. We're definitely threatening this area. Now, if you miss this drop, you do have a second chance as this continues to move lower from here. So just be patient with whatever happens to this current candle. Maybe it comes back up and retests the high of the previous day. But things that are weak are staying weak. So if you guys got a portfolio that doesn't seem to be doing anything, you're all right. There's no reason to make any sort of reaction, as the markets are actually kind of waiting for a direction themselves. So the markets remain in their respective ranges. Sentiment remains steady despite the current events. Not a lot of abandonment, not a lot of panic. We saw a little bit of a spike in the VIX yesterday, but no follow through when it came to selling. Today, no real reason to buy. Let's go down here to the ADP, beats its estimates at 143K, but it's still below the 200K expansion. We do have jobless claims and non-farm over the next couple of days, so we'll see if the markets react to that. But so far, what the Fed's doing versus what the economic numbers are doing is right in line, and these markets are kind of reacting to it. I thought there would be something a little bit more skittish with it, but there's not. We do have an election coming up. We'll see if that changes anything, but where the markets are at are complacent. We can take complacency and use it to our advantage if we stay in the direction of the trades that we already have. Follow the sectors, follow your plan, and things can work out. As always, folks, checks for earnings on the trades that you are making unless you're trading them specifically for that. Thanks for joining me, guys. We'll talk to you next time. Bye, everybody.